Imagine waking up every day knowing that the traditional paths of investing are slowly suffocating your potential, dragging you into a maze of diminishing returns and invisible risks. That crushing feeling? It's real, and it's biting harder than ever. Hedge funds have been caught in the vice grip of volatility, crowded trades, and the endless chase for alpha. Yet the game is rigged. Inflation rising, central banks pulling strings, markets twisting unpredictably. Sound familiar? The old playbook just isn't cutting it anymore. You see, this isn't just a problem for the smaller players. Even the giants in the hedge fund world are scrambling, hunting for new ground, desperate for stability and growth that isn't built on shaky foundations. This is where private credit explodes onto the scene, not as a tired option, but as the battlefield for survival and domination. This is where the biggest bets are being placed right now, and ignore it at your own peril. Here's the brutal truth. Public markets have become a trap. They're noisy, they're transparent in all the wrong ways, and they're subject to every whim, tweet, and geopolitical heatwave. Hedge funds are chained to daily pricing, margin calls, and the relentless pressure to perform quarter after quarter in front of an unforgiving audience. Private credit offers something far more revolutionary, a chance to step out of that relentless cycle, to tap into deep pools of uncorrelated, high-yielding assets tucked away from the manic chaos of public market swings. This is about reclaiming control, about weaving a narrative of power where returns are decoupled from the short-term noise that has wrecked portfolios for years. Imagine being able to lend to companies that actually need capital, that have real cash flow, real dreams, and being paid handsomely for it, with covenants that protect you and choices that position you far from the brink of liquidation. But here's where it hits the core of your pain. The world of private credit isn't laid out on a silver platter. It's opaque. It's fragmented. It's the kind of terrain that forces you to shed old habits and break from the herd. For years, private credit was a playground only for those with insider access, deep connections, and the patience for illiquidity few dare muster. It felt exclusive, complicated, almost designed to scare off anyone who wasn't hardcore. That's real frustration right there, knowing the prize exists, but feeling locked out because the system hasn't caught up with those who crave its potential. And if you've tried taking a dip, you've probably faced the nightmare of opaque terms, questionable transparency, and a lack of standardization that feels like gambling blindfolded. What cannot be overstated is that private credit is not just a fresh playground. It's emerging as the backbone of the new economy, the fuel to enterprises left behind by banks retreating since the financial crisis. Hedge funds that seize this moment are not just chasing yield. They are engineering a seismic shift in the allocation of capital. The edge is razor sharp here. It offers better risk-adjusted returns, greater control through structuring deals, and more meaningful influence in shaping the fate of the businesses behind those investments. Riding this wave means outsmarting the market's herd mentality and evolving from just reacting to trends to becoming a creator of them, turning scarcity into opportunity, opacity into information advantage. Yet, the challenge, and the same thing that makes this space so explosive, is illiquidity. Cash is no longer king in the private credit universe unless you're ready to lock it away and play the long game. It's not liquid like stocks or bonds and demands an entirely different mindset, a patient, strategic, and far more nuanced approach that pushes hedge funds out of their reactive mode and forces them to think like builders and guardians of capital. You can't win here by chasing the crowd you left behind in public markets. You win by mastering relationships, mastering deal flow, mastering timing, and mastering patience in ways that demand humility and relentless fire at the same time. Now, let's get real about the magic behind the curtain. private credit's secret weapon: covenants and control. When you're buying bonds and securities on the market, the company calls the shots, and your leverage is limited to trust and market price. But in private credit, you carve out protections that feel almost revolutionary: early warning signs, veto rights, step-in clauses. You hold a sword, not just a shield. This means your capital isn't just along for the ride, it's a force that commands respect and shapes destiny. This kind of influence redefines risk entirely. It lets you play defense and offense at the same time. Never before have hedge funds had such tailored tools to protect and amplify returns in ways that put traditional debt instruments to shame. For leaders and investors hungry for sustainability in returns and the kind of edge that isn't eroded by market hysteria, this is electrifying. It sparks a rebellion against old investing dogma. No more treating capital like dice to roll blindly. It's about digging deep, building alliances, and unleashing influence on the real economy's pulse points. Those who grasp this are already moving on an entirely different plane, composing symphonies of wealth out of what others see as random noise and uncertainty. The old hedge fund players are on the ropes, and those strategizing with private credit aren't just surviving, they're evolving, becoming architects of the market's new rules. But what about risks? They're real and ruthless if ignored. No sugarcoating here. Credit risk, market risk, illiquidity, they aren't just words. They're the monsters lurking in the shadows of every private debt deal. That's why discipline in underwriting, precision in due diligence, and patient deal structuring become your holy trinity. Hedge funds must abandon reckless leverage, blind trust, and herd mentality to thrive here. Winning is reserved for those who marry rigorous analysis with strategic relationships, who can spot not just the obvious cash flows, but hidden cracks that others miss. The ability to pivot and renegotiate mid-cycle is just as critical as initial deal sourcing. This is a full contact game, not a spectator sport. Now think broader. Private credit isn't just about grabbing bigger slices of the pie. It's about building new frameworks where capital flows to disrupt and create real value, where hedge funds become enablers, partners, and catalytic forces for companies that otherwise would be trapped in the shadows. This creates an ecosystem of empowerment that flips the old investing model on its head. No longer will investors be forced onto anonymous public stages where price volatility rules. This is a deliberate, almost intimate form of investing that demands trust, guts, and vision, all of which translate directly into richer returns and sustainable legacy. For those ready to step beyond the surface, private credit offers a chance to rewrite the rules, foster innovation, and become indispensable to the real engines of growth. And here's a truth that can't be overstated. This moment is fleeting. The surge toward private credit is accelerating, but it's still under the radar for many. The systems won't wait. Gatekeepers will tighten. Access will narrow. Those who wait too long will find the space flooded, yields compressed, and opportunities buried beneath layers of competition that began right now. It's a race where speed matters, but so does wisdom. You must move fast without breaking the code of patience and precision that private credit demands. This isn't about making a quick buck. This is about building a fortress of wealth that can withstand the storms the public markets cannot. Now, how do you break in? Not by reinventing the wheel, but by forging alliances, the kind this world sorely lacks. Hedge funds need to tap into networks where rare talents, visionary founders, and sharp capital converge. Insider access alone won't do. It's about building an ecosystem, a network of deal flow that's not just transactional, but transformational. Partner with specialized managers, join syndicates with aligned incentives, and invest aggressively in understanding the sectors where private credit breathes strongest. Middle market companies, real estate, infrastructure, and tech-enabled businesses hungry for flexible, smart capital. These are the playgrounds where the future is handed over to those with the guts to back it. Ultimately, the shift toward private credit by hedge funds is a story of liberation. It is about breaking free from the suffocating cycle of public markets dominated by front-running algorithms, fleeting market sentiment, and fragmented regulation. It is about reclaiming freedom through control, authority, and deep value creation. The temptation to stay comfortable, to cling to familiar tools, to fear the slow-moving and complex nature of private credit will doom many. Only those who are restless, who burn with the hunger for more, who are ready to question every assumption, will thrive. Private credit is calling. It's screaming out for those who dare to reject the illusion of easy, liquid profits and embrace the challenge of constructing returns that are both fierce and enduring. A realm where patience isn't a handicap, but a weapon. An arena where power comes from partnership and precision rather than noise. Hedge funds locking this in aren't just adjusting tactics. They're igniting a revolution in how capital serves its greatest purpose: to unleash genuine growth, to reward disciplined risk-taking, and to craft futures that matter far beyond spreadsheets. If you felt that fire inside, that restless push against the status quo, this is it. This is the edge where the few become all, the place where hidden value is turned into unstoppable momentum, the space where hedge funds no longer play catch-up, but define what's next. The era of private credit is here, and it's ruthless. It's waiting. It's yours for the taking. Don't just watch the future unfold. Grab it.